we are in print for our base case as saying that we believe Bitcoin, which is now closing in on 40,000, will be at 640,000 by 2030. That's our base case. The Bitcoin ETFs have increased the probability of our bull case, which is $1.5 million. And if you want to see the building blocks of that, you can take a look at Big Ideas 2023, which we published last January. We're about to publish 2024, and you'll see in Big Ideas how we get to those two cases.
ARK Invest's founder, CIO, and CEO is Cathie Wood. ARK Invest manages disruptive exchange-traded funds. Recently, Cathie has been interested in crypto and digital assets since her company bought $100,000 of Bitcoin at $250 per coin in 2014. The SEC approved the firm spot Bitcoin ETF cooperation with 21 shares, making it one of 11 Bitcoin ETFs available to investors. Her team extensively researched the Bitcoin blockchain and other disruptive innovation platforms. Cathie believes Bitcoin's price will soar. According to ARK Invest's CEO, Bitcoin prices might reach $1.5 million per coin by 2030, a 3,650% rise. Cathie has had this attitude about Bitcoin for a while, but spot Bitcoin ETFs have made the bull case more feasible. Cathie is hopeful about Ethereum and the blockchain industry. Thinking Crypto interviewed her recently. Cathie predicts spot Ethereum ETFs will be the next big thing. She said the Grayscale lawsuit forced the SEC to allow spot Bitcoin ETFs. Cathie expects the same for Ethereum spot ETFs. In addition to Congress and potential crypto laws, Cathie discusses Bitcoin ETFs and crypto acceptance. We'll show you interview snippets. Once you like this video, subscribe to the channel and leave your comments below. Thanks and enjoy the video.
I think one of the reasons for the regional bank crisis was the Fed raising rates at a faster rate than it ever has, up 24-fold in 17 months. Never seen anything close to that. Chairman Volcker increased interest rates twofold, not 24-fold.
Right.
So that was part of the regional bank crisis. And notice Bitcoin went up during that. So, and it is true, it probably was anticipating the financing program that the Fed put in place, which was a bit of a jog toward easing, and then it went back, a reverse course.
Mm-hmm.
So we think that the Fed is going to cut rates. Now, there are a lot of confusing economic data. We hear something from companies and something very different from the government in terms of economic activity. They're not matching up. They're not matching up at all. And so I find that very interesting. I think the Fed is going to figure out that there is much more stress in the system, that the regional bank crisis was the first sign of it, and we'll get other reminders, and that they will move into a rate cutting. Now, what we really think is going to happen is it's going to be less about real economic indicators. It's going to be about price deflation. We think, and Walmart has said, we're going to have to cut prices. That's deflation. That's not disinflation even, it's deflation. And I believe the Fed is going to be shocked at broad-based price deflation this year, and that will be, they're using now inflation as their primary gauge. They're not as focused on real economic activity because inflation has come down even without a recession. I think we've been in a rolling recession, but nonetheless. So inflation is the primary variable they're watching. We think there's going to be deflation, so they'll get 2% all right, and it'll keep falling. So they'll lower interest rates. That will be very good for risk assets, and Bitcoin among them. It was interesting. I think it was in late in the fourth quarter or earlier in January, Bitcoin led the market. And so if began to, and so we're watching Bitcoin now. And of course, we're having a sell on the news moment after the 11 Bitcoin ETFs are approved. And I don't know how far that's going to go, This is high frequency trading. It's people getting in just for that short boost and now getting out. But institutions and these retail platforms are going to start moving in, and then we'll see the scarcity value. So what is the price target? We have everything focused on the long term, but it takes short terms to make up a long term. So by 2030, we are in print for our base case as saying that we believe Bitcoin, which is now closing in on 40,000, will be at 640,000 by 2030. That's our base case. The Bitcoin ETFs have increased the probability of our bull case, which is $1.5 million. And if you want to see the building blocks of that, you can take a look at Big Ideas 2023, which we published last January. We're about to publish 2024, and you'll see in Big Ideas how we get to those two cases.
SEC's Coinbase case continues. The SEC says Coinbase brokers, exchanges, and clears unregistered securities such Solana Cardano, Matic Coin, AXS Flow Dash, etc. The SEC appears to have accepted Coinbase's contention that these assets are commodities like Bitcoin and Ethereum. In court on Wednesday, Coinbase lawyer William Savitt claimed crypto is more like collectibles than stocks since investors lack corporate stakes. The difference between buying Beanie Babies Incorporated and buying Savitt believes this case will affect the Bitcoin environment, and Bloomberg experts concur. The SEC's definition of securities was too broad for Coinbase, according to New York District Judge Catherine Fia's social media statement. Bloomberg senior litigation reporter Elliot Stein believes the judge's inquiries indicate the SEC lost. The court asked the SEC to exclude collectibles from its investment contract definition, the Post said. We prefer Coinbase's since it requires firm investment, not merely atmosphere and legal requirement. We believe Coinbase can beat the SEC 70% of the time. If this motion fails, the case will likely reach the Supreme Court, where it will be slowed. Cathie stresses Coinbase in her webcam talk. More videos discuss crypto laws and Bitcoin ETFs.
That would be the one. I think if after this election, I don't think Chairman Gensler will remain at the SEC, whoever is elected. I think he has aspirations for some kind of political appointment, so he may go for that reason if Joe Biden is reelected, or he may go, or he will go altogether if a Republican is nominated. So, yeah, the SEC could drag its feet, but I think the court cases have spoken pretty loudly. We have the Coinbase hearings. We'll get lots of information about what is not a security during that trial. So I do think that raises the odds of an Ethereum spot approval. The Gensler could be in the way, but we do think it will be approved. Bitcoin was up fivefold last year, partly for that reason. Coinbase.
Okay.
So yes, I think that Coinbase is going to do us a great service through the court system, and the court system is going to do us a great system. You know, if you look back in history, we have had an experience like this before. It was when derivatives were launched, and the SEC and the CFTC were vying for power over regulatory power over derivatives. It went all the way to the Supreme Court, which this probably will. And that forced legislation so that both the SEC and the CFTC have a role in derivatives oversight. But those roles are clearly delineated and they don't cross over. I think the same thing's going to happen here. Could be an election year issue. And I think that's one reason we are seeing so many congressmen getting so well educated on what this is. I mean, I heard Congressman French Hill a couple of weeks ago, and I said, "Wow, he's come up the learning curve so quickly and knows so much. This is fantastic. Knowledge and education. Knowledge is power. Education obviously is the route to knowledge. So I think, yes, I think the odds, I don't know how high they are, but in the next 2 years, I think the odds of legislation are very high. I don't know how the election year complicates it. I do know that there are voters out there who are one-issue voters, and they are crypto voters. And I know that Washington is hearing that loudly and clearly. You know, you heard it from Larry Fink. If you've got a powerhouse, one of, I think the largest asset manager in the world, might be wrong, maybe there's someone in China, but saying this is the way the world's going, there are two things you know. One, there must be a lot in it for BlackRock, and that could go either way. They're trying to avoid being disrupted, and they want to get on the right side of change, or they see a way to make a lot of money in it. And I think taking middlemen out, again, is going to compress the kinds of fees. So I think it's a little bit of both. He wants to not be on the defensive, wants to go on the offensive or on the offense. And he probably does see a way to capitalize on. Advice on investing. I think in the early days of investing, when someone's thinking about investing in a new asset class, like Bitcoin, for example, I think the mindset is, you know, I'm going to do it, and they put a lot on it, maybe too much early on. And what I believe everyone should do is leg in, average in, whether it's averaging down, that's psychologically okay. Your average price for getting in is going down, and if you're right on the investment, it will turn around and you'll pass that average pretty quickly. Or you're averaging up, and that's okay too, because there's nothing feels better than appreciating asset, right? So I think averaging in, and I do think, while many people say diversify, 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 there are other people who do say, and Warren Buffett is among them. Yeah. You know, if you see a big idea, if you believe, if you're educating yourself that this is a really big idea, then, you know, don't diversify away from it as much. Now, the rules of the game as we address advisors means we have to take profits. We can't let any stock or asset go above a certain percentage of the portfolio. That's just kind of the rules of the game that they play by, and the way you can get onto platforms. But I think for individuals, you know, if you believe you're onto a very big idea, average in one way or the other, weigh the evidence as it comes in. Are you feeling higher conviction or lower conviction, especially if the price is going down? If you're feeling higher conviction as the price is going down, that is a very good sign.
Paul Gruth, Chief Legal Officer at Coinbase, says that the exchange is ready to see this through to the end and make sure that the Bitcoin industry doesn't fall for any more political tricks. In the recent threat of Guth pointed out that the SEC's claims against Coinbase are false because the exchange does not offer securities. Here are his posts from today. We made arguments in our motion to dismiss the SEC's suit against Coinbase. After hours and hours of deliberation, it is still clear that the SEC claims broad control over all investments without defining investment contracts in a way that limits their applicability. The SEC cannot unilaterally broaden and redefine its own regulatory goals. That should be the job of Congress and the ongoing legislative discussion about regulatory frameworks. Coinbase does not offer stocks. We are sure of our legal arguments and look forward to a decision that will bring much-needed clarity to the industry. Which do you think has the upper hand here, Coinbase or the SEC? Please leave your answers and comments on Cathie Wood's interview below. Also, make sure you like this video, subscribe to the channel, and turn on post notifications to see more videos like this.